pleased to see that many of you have shown interest on today's topic, Satcom operators, the path to revenue growth. As you know, satellite operators play a central role in the Satcom value chain, providing satellite capacity and services to a wide variety of user communities. After years of steady growth, even during the economic recession, such as the 2008 financial crisis, Satcom operators are now challenged in growing their business. So in today's webinar, we'll dive into the questions such as what are the satellite operator strategies and new investment plans? How is the COVID-19 crisis impacting Satcom markets? And what is the trajectory for return to revenue growth? However, before we address these questions, let us jump back 9 months ago to the situation before the COVID-19 pandemic outbreak. So if you look back, a total satellite operators revenue, we can clearly consider 2014 as an inflection point. Until then, capacity revenues were steadily growing. However, since 2014, revenues are on a downward trend. In 2019, total revenues stood at $10.8 billion, which is on par with the level achieved in 2010. One remarkable point of the $1.5 billion in revenue erosion is the relatively high exposure of the four global operators, Intelsat, SES, Eutelsat, and Telesat, who collectively represent 83% of the total revenue drop. Revenue erosion among other operators was more modest, as declines from the regional operators were largely offset by gains from new entrants. So now let us look at the underlying drivers for the decline in industry revenues. And this slide summarizes the big picture. Historically, satellite capacity was considered a scarce resource, so satellite operators carefully managed the supply and demand balance to optimize capacity lease rates and maximize revenue. Following the introduction of high throughput capacity, this balance has been disturbed. The influx of new HTS capacity caused oversupply in a number of regions. Moreover, the lower cost of HTS capacity resulted in lower capacity prices being available on the market. As a result, the satellite capacity market experienced a massive price reset, reflected in the average capacity price dropping by 62% between 2014 and 19. Meanwhile, satellite operators have not been able to scale up demand to fully compensate for the price reset, causing this negative revenue growth trend as we have observed until today. So this is the big picture, which clearly does not tell the full story. The Satcom market is currently facing structural drivers of market pull and technology push. In recent years, the space sector has been pushing for substantially more cost-effective satellite and ground infrastructure, with an increasing technology push for standardization in satellite manufacturing and the use of reusable launch rockets to drive down the space segment cost, but also the enhanced flexibility of satellite assets through digital processing to maximize the commercially usable capacity and to potentially adapt bandwidth supply to changing market demand. We also see new NGSO constellation projects like the Starlink, the Telesat LEO, and Amazon Kuiper are being planned, introducing low latency, system redundancy, and ubiquitous global coverage, all planned to open up new markets and applications. So all these technology investments are geared to meet rapidly evolving market requirements. Satellite operators have started to embrace this driving requirement for broadband connectivity anywhere, anytime. However, there are high expectations in terms of user experience and service costs. So the opportunity is mainly centered around two avenues. First, connecting about 180,000 vessels and airplanes operating beyond the reach of terrestrial networks. And second, the global ambition of universal broadband access, where satellite can play a role for connecting the 1.5 billion unconnected people in rural areas. So satellite operators have largely recognized these opportunities and started to reposition their investments towards these new growth segments. In addition, they have been adopting new business models to better serve the unique user requirements of specific verticals. So overall, the expectation of the operator's investments in new infrastructure and business models was to result in a return to growth by the end of 2020. However, the COVID-19 has certainly thrown a curveball at operators' strategic plans, resulting in heightened revenue pressure in 2020. So this leads us to the next section of the webinar, the impact of COVID-19. So before I will show you kind of our view at Euroconsult of the impact, I would like to initiate an audience poll. So Alexandra, I think you're, okay, I see it over here, so I'll take it from here as well. So the question I would like to ask everyone is, where do you expect to see the biggest COVID-19 impact on vertical markets? Whether it's consumer broadband, video distribution, mail Satcom, enterprise networks, trunking and cellular backhaul, video contribution, aero connectivity, or maritime connectivity. Please select one option and we'll give it a few seconds to get the first results. All right, Alexandra, do you again share some of the first results with us? All right, that's a clear winning answer here is the aero connectivity. So without further ado, let me give you our overview as well on the impact. So starting from the top, and just to highlight that our assessment is largely based on interviews that we've conducted with operators and service providers, as well as analysis of the key KPIs of satellite operators. So first, and it's important to note that not all segments have been negatively impacted by COVID-19. For example, consumer broadband, there's a positive impact with some substantial subscriber growth and, more importantly, subscribers shifting to higher value plans. So that really drives basically the capacity usage of the segment on the short term. Overall, we expect this to be a short-term impact as schools and offices are reopening, hence limiting the time spent at home. Video distribution also experienced a positive impact in terms of increasing viewing hours of linear TV. However, this is not translated into additional capacity leases. Actually, broadcasting platforms such as Sky Italia and Tata Sky decreased their number of channels due to lower advertising revenues. Mail Satcom experienced a modest negative impact, which should be short-lived, as this market segment has historically been recession-proof. Enterprise networks and cellular backhaul trunking is a bit of a mixed bag, in which verticals such as tourism and energy are mostly negatively impacted. But generally, the segment experienced temporary delays in new projects and terminal installs, which shall have a short-term impact. In terms of video contribution, the occasional use market has been severely impacted by the postponement of major sports events. Generally, these market segments should rebound next year, with Summer Olympics and European Soccer Championships planned. So finally, the aero and maritime segments, and I think the poll already indicated the aero being the mostly impacted, and definitely shared our view as well. We've seen the airplanes being grounded, but also cruise ships being docked and offshore oil rigs being cold stacked. So for the operators in particular, take or pay agreements could limit their near-term exposure. However, we have seen operators already started to renegotiate lease contracts to ensure the longevity of the service partners and end users. The really biggest challenge for these segments and all the stakeholders involved is the relatively high uncertainty around the recovery time of those segments, and to identify the new normal in cruise and air travel. So to summarize the key takeaways of the COVID-19 impact on the Satcom market. Number one, the temporary supply chain issues have caused delays in VSAT shipments and project rollouts, with several new VSAT networks and backhaul network deployments being pushed to later this year. Overall, this is the expectation to have only a short-term impact if the COVID-19 situation continues to improve. In contrast, key growth market verticals such as aero IFC, cruise, offshore oil and gas are deeply impacted with uncertain time of recovery. As these segments, and especially aero IFC, which were identified as a primary growth vertical for satellite operators, this will evidently cause a delay in the operator's trajectory to return to growth. In addition, the current financial climate will make it increasingly challenging for satellite operators to finance new satellite projects. This is especially the case for regional operators and new entrants who lack strong balance sheets. However, despite these short-term headwinds, COVID-19 crisis is not expected to rescind underlying market drivers that will enable long-term growth projections. So with all these new dynamics in mind, we've revised our Satcom market forecast to reflect the new normal. So this chart shows our total capacity revenue forecast. So the dark blue line represents our last year's forecast and the pink line is our latest forecast. So when comparing the two forecasts, the following items stand out. So first, in the near term, revenue in 2020 we project to be around 4.5% down compared to 2019 due to the COVID-19 impact and structural downward trends for video applications. Subsequently, 2021 revenue should be slightly down to potentially nearly stable. In the middle term, we project the return to revenue growth in 2022, and accelerating growth from 2023, surpassing the 2012 billion revenue peak by 2024. For the long term, we forecast sustained revenue growth, with total revenues reaching 18.7 billion in 2029, which is still around 900 million below our last year's forecast for 2028. So this next slide zooms into the medium-term impact by comparing cumulative revenue by vertical market between this year's and last year's forecast. So we'll focus a little bit more on the right side of the chart. And I think no surprise, as highlighted in the presentation, verticals like maritime and aero IFC are most impacted by COVID-19, leading to a significant downward revision. These mobility markets represent about 55% of the cumulative revenue difference over the period 2020 and 2023. Video distribution is also down about 900 million in cumulative revenue over the next 4 years, but this is mainly due to structural trends and a kind of an acceleration of price pressure as we have seen in the last 12 months. Other verticals are less impacted, and generally speaking, capacity demand ramp up is delayed with about 12 to 18 months due to the COVID-19. So this slide provides a more detailed breakdown of our new revenue forecast. I would say the main point on this slide is the inflection point in 2022, where wholesale revenue for data applications is projected to surpass video applications, which is historically being the kind of the main market for satellite operators. And if you look forward, there's this trend in gap is definitely continuing, where total, basically the 2029 revenues, the data market should represent around nearly 80% of the total Satcom market value. Finally, to achieve the 18.7 billion in revenues by 2029, satellite operators will have to sell close to 10 terabits of capacity, which is about 6 times the volume leased in 2019. So clearly, as with any market forecast, there remains a significant level of uncertainty around the probability of occurrence. So in order to better provide guidance, we've mapped out 6 key conditions for growth of our market forecast. So number 1 is multiple NGSO broadband constellations reaching full operational status. So our forecasts are contingent on at least 2 new large-scale LEO constellations entering full operation within targeted timelines while hitting capital cost and usable capacity targets. In absence of these conditions, market demand is unlikely to accelerate post-2023. Related to that, number 2, advances in user terminal technology and cost points. So while the geostationary user terminal landscape is relatively well developed, significant advances in NGSO user terminal technology, production volume and capabilities are likely to be required to help drive higher penetration of addressable markets. Number 3, continued growth in government support through USO funding and initiatives. So one of the leading drivers of capacity demand over recent years has been government funding and programs aimed at bridging the digital divide in rural areas. Accelerated government support is a key remedy of broadband market failures in areas where it's difficult to close business cases for extending network coverage on a purely commercial basis. Number 4 is the closer integration of satellite connectivity in the networks and distribution channels of terrestrial ISPs and MNOs. It's a truly important point because in order to grow the pie of capacity demand, satellite operators need to deepen the relationships with fixed and mobile network operators as both customers and distributors of satellite solutions. Number 5 is the further drop in the cost base of satellite capacity and end-user pricing levels. So the value proposition of the next generation satellite systems has improved drastically over recent years. However, continued progress in the cost base and pricing levels of HS capacity are required to continuing supporting narrowing the gap between satellite services and terrestrial networks. And finally, number 6 is the adoption of new sales models. So satellite operators are expected to adopt new sales models, including revenue share, usage-based models, or co-investment to stimulate the market take-up. There is a strong need for operators to take on greater market risk and to support a service ecosystem in order to grow the market pie. So this presentation really focused on the primary business activity of satellite operators, which is the leasing of satellite capacity. But clearly there are other sources of revenue that can create an upside. Number 1 is the C-band spectrum sales. As demonstrated in the US, the auction of C-band spectrum is the largest revenue upside for satellite operators. If commitments and timelines are realized, 5 satellite operators, FCS, Intelsat, Telesat, Eutelsat, and Star One, will be eligible to collect a total of 9.7 billion in incentive payments. Other countries such as Thailand and Canada are now also considering C-band spectrum auctions, providing another revenue opportunity for operators involved. Another avenue is the accelerated push to vertical integration to drive service revenues. So operators have already started to pursue opportunities to provide managed services to selective set of end-user markets. If operators decide to make a more aggressive push towards end-to-end service delivery, revenue generation will increase, however, likely at the expense of their profit margins. C is the satellite-based IoT. So satellite operators such as Eutelsat are exploring the IoT market as a new avenue to diversify the revenues. And finally are the USO-driven structured finance projects. They could have a significant impact on satellite capacity demand. Public-private partnerships such as the Satria satellite project in Indonesia can have a big impact as it neutralizes market risk for the operator. So if successfully implemented, the Satria satellite project could become a blueprint for countries or development finance institutions to bridge the digital divide. Well, Alexandra, this was my last slide of the presentation, so I'm happy to turn back to you and to address any audience questions.
Hi, Nathan. Welcome back. Indeed, thank you for your presentation, and it is now time to open the floor for your questions. So if you have not done so, please use the Q&A button below your screen to share your questions with us at any time. In the meantime, let me just kind of kickstart this Q&A session, Nathan, with the first question on if we are to look at the next decade. How do you expect the competitive landscape to change, or how the landscape will look like in the future?
Yeah, it's a good question. So how it exactly looks like, it's of course a bit of a difficult to answer, but definitely there will be a different significant change. So if you look at today, the market is pretty much dominated by the top four operators. They hold about 66%, so 2/3 of the market. But if you look at the developments, you see, well, we talked already about today about new entrants like the Starlink, like potentially Amazon. So there's a lot of so new entrants coming into the market. As well, you have Viasat with a very, the next generation program. Viasat 3 would give them kind of global coverage to be kind of a truly global operator. So there's definitely more competition around in the market. So for the global operators, I think you will definitely see this kind of that they will adapt their business operations. They will adapt their sales models. I think one of the key elements really is about improving relationship and probably taking on as well more market risk, right? We already seen some operators kind of co-investing in deployments of cellular backhaul networks or working with more like usage-based models. So it's really taking on greater market risk, working more closely with the vertical markets to be more competitive. And I think, for the regional operators, which there are quite a number, they are, maybe at a bit of a challenging position right now with a lot of new entrants coming in. But again, I think there's also a role for them potentially to play with new entrants who don't have these kind of local market access. So they're kind of, let's say, competitive advantage is to have, country access, existing distribution channels. And I think, partnering with new entrants of maybe some other players could help them in basically grow their business as well. So definitely going to be more competitive. Yeah, it's going to be an interesting area to watch.
Mm. And now another question, actually, because we're talking about revenue and growth. One of our attendees is asking, after 7 years of revenue contraction and with the massive increase in the supply side coming, is it realistic to refer to a return to growth?
Yeah, no, it's something that we've been, looking closely, and it's all about, at the end, the kind of demand elasticity, right? And there's two things to it. So I think a lot of things which is driving pretty well is that the cost economics are going down. And, if you run business case analysis on some of those markets, like cellular backhaul, driving down cost would make the business case work for a number of satellite solutions. For a long time, we've also seen a lot of promising movements around Aero IFC with, airlines like Delta pushing for this free Wi-Fi a model. Of course, COVID-19 could delay these plans, but there are kind of this driving need for connectivity is there. I think the things that the operators have been challenging, and I pointed out, so there was this massive price reset, and they've been able to increase sales, lease capacity, but not to the significant extent. So it's really, I think the main goal is in the execution of the next kind of commercial plans to really make sure. And that's why I think it's also continued on, working with new sales models and better integration with MNOs and service providers. If that's happened, and that's kind of the biggest kind of condition for growth, I would say, for our forecast, it's the main driver, I would say, for our revenue growth. But just as well by the new capabilities being available, the massive capacity supply, there will be, a growth in revenue that is expected. Partly offset by continuing decrease in video markets, but even in video markets there are areas where where the kind of the revenue decline is stabilizing. So there's also some signs for that. So again, it remains a forecast, a significant certainty. So we'll closely track those 6 conditions for growth, whether they would happen. But if they happen, we're pretty confident that this revenue forecast can be achieved.
Thank you for that, Nathan. And during this time, we've seen a lot of public support stimulus coming from governments to different industry. What do you think the impact of this public stimulus packages will have on this industry?
Yeah, it's a good question. So I think, the aerospace industry, and it depends a little bit on country, there will be significant support, which is of course important for the satellite manufacturers as well to maintain the capabilities for satellite manufacturing. To what extent it will trickle down to satellite operators is yet to be seen, I think. To my knowledge, they're not necessarily have benefited directly from those stimulus packages. But again, I think, they are impacted by A, the satellite manufacturers, and B, and basically B, on the servers level, right? So if there are certain stimulus packages for broadband connectivity, they could benefit from that. If there are other support, for example, in the US, there's a support program for maintaining subscribers on consumer broadband during the COVID-19. So that had a short-term positive impact. On the longer term, I think the big question here is, as I pointed out, the USO kind of element of the satellite market is very important, right? And to what extent economic crisis following this COVID-19 would impact government budgets to spend on universal service obligation have yet to be seen. So especially in emerging countries, this is a key element. So you could argue that, with the COVID-19, there's more, the need for broadband connectivity in rural areas has probably gained more support. But again, there's a bit of a question if, with money spent on all different economic directions, that there will be sufficient money still available for pushing the connectivity programs, the USO programs forward over the next 5 years.
Mm. And just in terms of just comparing crisis and then looking at the past and the future, how is this crisis different from what we've seen in the sector in 2007, 2008?
Yeah, it's a good question. So yeah, it's pretty striking to see that during those periods of 2007 and 8 with the financial crisis, actually revenues continued to grow for satellite operators with a minimum impact. I think it was also probably partly due that the underlying markets at that point, the broadcasting market was not so much impacted by the financial crisis. As well, as I pointed out, the kind of very tight supply-demand control by satellite operators kind of resulted that they could carefully manage their capacity lease rates. So overall, if you look back, and I mean, when we had some, at that time as well, we were pointing out that satellite operators were basically, beating the market trend at that time. At this stage, it's different. I think, the structural drivers has an impact, but as well, I think, as I pointed out, for example, the key growth markets, so aero IFC and the maritime, for example, the cruise, are very much impacted. So, you definitely have a direct impact in the kind of key growth markets of operators today, which makes a difference from, let's say, last time where their kind of main market video at that point was not so much impacted.
Thank you for that feedback, Nathan. And also another question which focuses more on the geographical spread of the growth. Are we expecting that this growth to be different on a regional level? And perhaps you can give us an insight on which regions might be, let's say, more affected or by revenue growth or decrease.
Yeah, it's a good point. I mean, that it also depends a little bit on the vertical market, but generally I would say for the connectivity part, the biggest upside is clearly in Asia, in Africa and Latin America, whereas, a very kind of latent pent-up demand for connecting unconnected. For let's say more of the mobility market, we'll still see the initial growth more in North America and Western Europe for the aero IFC market, but definitely Asia is in the longer term our biggest growth market. So I would say if you look at probably regionally from where it is today to going forward, I think the overall share of what we call emerging regions like Asia, Sub-Saharan Africa and Latin America are gaining share over time. And again, I think it's also very much sometimes dependent on local programs. I pointed out to Indonesia, for example, where they have the Cetra project. So this kind of project can really help build demand in a specific country. In the US, you have the RDOF opportunity, so providing connectivity to it's a big subsidy program by the US government. If satellite solutions are able to tap into that, it will have a direct boost of activity. So again, there are regional, I think there's definitely some trends to envision, where the exact countries are the biggest growth drivers are also a little bit depending on some of those programs that I refer to when and if they're happening.
Thank you, Nathan. I'm looking at the questions now here. Just another question this time on a new entrance, saying that Starlink will start beta testing this summer. When do you expect the first LEO constellation to scale up their commercial offer?
Yeah, so no, definitely Starlink is at this point, well, we of course, in terms of the NGSO constellation, we have O3b already running, but if you look at LEO, Starlink is at this point taking basically the lead. Still a lot of kind of uncertainty around how exactly the service would look like. So I think everybody's pretty keen on seeing the first beta tests and the first services being offered hopefully later this year. So definitely I think from that point we'll have a better understanding on where and how, how they kind of competitively compare to the current solutions into the market. From that, I think if they get their funding all in order, they would be able to scale up pretty quickly. Of course, they control their own lands and launch and manufacturing capabilities. So it's building out their capability. They control their own timelines. For the other constellations, if you look at OneWeb, for sure, we're now re-emerging, but finalizing the bankruptcy process, probably adjusting a bit of the strategic commercial plans. It will probably take a bit more time for them to come to the market than originally planned around 2022. And other programs, I think, like the Telesat LEO and Amazon, probably take more time. But again, they're making progress on the different ends. Each one has their own challenges to overcome. But I think, overall, I would expect by, at least 2 LEO constellations by 2023 being fully operational. And potentially, up to 4, shortly after the 2024 timeframe.
Another question also regarding demand coming from one of our attendees is whether we expected 5G to have any effects on the capacity demand.
Yeah, it's a good question. I mean, 5G is, you can see it in a different way. I think the mentality of 5G, or the kind of I would say that is a very strong driver for satellite demand in terms of that, integration, unified networks, and that will definitely help, I think, to satellite to be better integrated into terrestrial networks, which is a key element, and kind of also this driving need to have this ubiquitous coverage of broadband connectivity, for example. If you really look at 5G and, a very specific use case, the backhaul of 5G networks, cellular networks over satellite, I think this is more of a longer term opportunity. As we identified, the opportunity right now is for satellite in those rural parts, and where we would expect 5G to be first deployed is still in urban areas. So I would say in our forecast, we do project a number of 5G cell sites being backhauled, but it's, I think, a smaller amount, and it's probably beyond our forecast. It will take a larger share, but clearly the 5G mentality, and I think the push for network integration, standardization, is something that could be beneficial for the satellite industry.
Thank you for your insights, Nathan. And a last question, because I'm actually keeping a close eye on the time from the audience, is that in our revenue projection for 2029, what percentage is attributed to satellite-based IoT? And in your opinion, what type of companies do you feel are best positioned to deliver satellite-based IoT products? Or perhaps
Yeah, so just that's a clear, maybe good to clarify. So in our projection, there's 0 revenues reserved for satellite-based IoT at this point. So we consider it as a potential upside. So from the operators that are covered right here, and we have a different basically forecast for the IoT market. Typically, IoT is also more vertically integrated, right? So it's not necessarily selling bandwidth; it's more about delivering a service. So overall, Eutelsat expressed their interest, and they have their plans to potentially launch an IoT constellation. If you look at, of course, it can be an interesting area to diversify revenues. I would say to really make a substantial impact, it's more difficult to see because we talk about ARPUs of maybe $1 per month per device, right? So it's a very smaller scale opportunity in terms of revenue. But again, I mean, it's something that can diversify. It can also add on new revenues that are currently not achieved, basically. Yeah, in terms of the players, it's a very good question. I mean, at this point, there are probably like dozens of IoT startups, and they tend to be all kind of at the same stage. So they've often launched a few satellites. They're all kind of working towards financing the full constellation. And currently with the current climate of the COVID-19, it's probably very challenging for them to close that final financing round. So we definitely would expect kind of a little bit of a shakeout, I think, in the number of startups that are pursuing that opportunity. But clearly there is room, Iridium has already worked around it, and I think it's basically their biggest growth market today, providing, having a new kind of, let's say, lower cost IoT system capability over satellite would definitely make sense, and pretty sure there will open up some new opportunities in that market. Honestly, to really pinpoint to 1 or 2 companies that can basically be the preferred companies today, it's a bit difficult to really see, as they are all kind of at the same stage. So yeah, definitely important to watch that space, how it currently faring through this COVID-19 climate, and hopefully they will be able to start building out, completing their constellations in the next 2 years, so we can really start to see the service delivery and the impact on the market.